Welcome back to our channel, fellow investors. After a blockbuster earnings report from J.P. Morgan Chase, Bank of America, Wells Fargo and Citigroup, it's time to turn our attention to two of Wall Street's biggest players, Morgan Stanley and Goldman Sachs. Both of these financial giants are set to announce their Q4 earnings tomorrow, January 17th, and investors are eagerly waiting to see how they performed. With interest rates on the rise, we can expect to see a boost in income from loans, but lower investment banking fees and a weak macroeconomic backdrop could put a damper on their results. Join me as we take a deeper look into what investors can expect from these powerhouses and what it means for your portfolio. This is an earnings preview you don't want to miss, so make sure you hit that subscribe button and stay tuned for all the latest financial news and insights. First on the list is Morgan Stanley. Recently, the stock was double downgraded to sell from buy by Wolfe Research analyst Steven Chubak. The analyst expects Morgan Stanley's net interest income to peak in Q4 or at the beginning of 2023, which could put pressure on their operating margins. Chubak also highlighted Morgan Stanley's high valuation as a concern, with the stock currently trading at a price-book value multiple of 1.68, more than 31% higher than the sector median of 1.28. Despite this, Morgan Stanley stock has a moderate buy consensus rating on TipRanks, based on 7 buy, 5 hold, and 1 sell recommendations. Analysts' average price target of $96.60 implies 5.47% upside potential. As for Q4, analysts expect Morgan Stanley to post earnings of $1.25 per share in Q4, down about 40% YoY. Factors such as lower levels of completed M&A transactions and an increase in provisions due to the challenging macro environment are likely to hurt the company's revenues and bottom line. Up next, let's look what's in store for Goldman Sachs in Q4. Beginning in Q4, Goldman Sachs will operate through 3 business segments: Global Banking and Markets, Platform Solutions, and Asset and Wealth Management. While these organizational changes are expected to strengthen its core business and accelerate growth, near-term challenges from lower activities in the M&A segment and muted debt issuance could hurt its Q4 financials. Furthermore, Goldman Sachs' provision for credit losses could increase, reflecting the growth in the consumer lending portfolio and the weak macro environment. Notably, Morgan Stanley analyst Betsy Graseck lowered the price target on Goldman Sachs stock to $356 from $384 ahead of Q4 earnings, citing pressure on the bottom line from higher provisions. Wall Street expects Goldman to report earnings of $5.56 per share, significantly lower than the $10.81 per share in the prior year quarter. Goldman Sachs stock has received 6 buy and 6 hold recommendations for a moderate buy consensus rating. Analysts' price target of $400.65 implies 7.56% upside potential. Higher interest rates are expected to give a boost to loan-led income. However, the decline in deal activities in the M&A segment and higher provision for credit losses due to a weak macro environment will likely hurt the profitability of Goldman Sachs in Q4. Finally, United Airlines, ticker UAL, is set to announce its fourth quarter earnings tomorrow, January 17th, after the market closes. The rebound in air travel demand is expected to have supported the company's performance. Currently, the Street expects United Airlines to post earnings of $2.11 per share in Q4, compared with a loss of $1.60 in the prior year period. Meanwhile, revenue expectations are pegged at $12.2 billion, representing a year-over-year jump of about 49%. The company is expected to have benefited from a recovery in commercial travel demand and momentum in leisure travel. According to the International Air Transport Association, IATA, total air traffic in the months of October and November increased by 44.6% and 41.3%, respectively, on an annual basis. Additionally, according to TipRanks website traffic tool, United Airlines website traffic increased 10.4% YoY in Q4, hinting that demand for the company's services remains robust. However, volatile aircraft fuel costs and salary hikes paid to the pilots are likely to have impacted United Airlines' bottom line to some extent. Also, its performance in Q4 was impacted by bad weather during the peak holiday season. Is United Airlines a good stock to buy? The stock has a moderate buy consensus rating based on 7 buys, 2 holds, and 1 sell. The average UAL stock price target of $56.20 implies 9.1% upside potential. The stock has gained nearly 43% in the past 3 months. To recap, Morgan Stanley's knee is expected to peak in Q4, which could put pressure on their operating margins, and the stock's high valuation is a concern. Goldman Sachs is facing challenges from lower activities in the M&A segment and muted debt issuance, which could hurt its Q4 financials. United Airlines is expected to have benefited from a rebound in air travel demand, but volatile aircraft fuel costs and salary hikes paid to the pilots are likely to have impacted the company's bottom line. With all the uncertainty in the market, it's more important than ever to stay informed and make informed investment decisions. I wanted to give you a heads up that in our next video, we'll be taking a closer look at Procter & Gamble Co. Ticker PG, and Netflix, ticker NFLX. Both of these companies are scheduled to announce their earnings Thursday, January 19th, and we want to make sure you're prepared for what to expect. We'll be analyzing their past performance, current trends, and what to expect from their upcoming earnings reports. It's important to note that there may be a pre-earnings run-up for these stocks, so make sure you're keeping an eye on them. We'll be covering all of this and more in our next video, so make sure you hit that subscribe button so you don't miss out. Thanks for tuning in and stay informed.